Let's start off with what the China reopening means. And I want to start off with one of, you're challenging the premise of what many people are saying, that you take the example of many major economies when they reopen. You're saying we cannot look at them as a roadmap for looking at China this year. Why not?
Morning and Happy New Year to you as well, David. So quite a few differences between Chinese reopening and what we saw the experience of the other major economies. So, of course, as we know, China has been quite unique in its zero COVID policy, almost not unparalleled across the world. So, trying to bring a population of 1.3, 1.4 billion out of almost a cocooned and sheltered experience of 3 years of very strict curbs against COVID and a very abrupt U-turn, right? So that is a critical difference in terms of the mindset of the population. As we've seen over the past few weeks, the public has actually hunkered down in fear instead of making the best use of loosened mobility norms. Workers have been calling in sick. So, as COVID has spread, we know anecdotal evidence out there that the death count, unfortunately, is increasing as well. So China is going through a very painful, disruptive, and fearful exit from COVID. And, what the market is trying to put its finger on right now, and extremely difficult to do so, is how long this painful period is going to last until China actually moves on to a regular reopening where mobility and economic activity can go back to normal.
Well, Vandana, markets do look ahead. They're looking 2 months minimum from now, and that's what they're trying to price in. So some of that should actually be baked into the price. On top of that, we have the Strategic Petroleum Reserve also being refilled by Joe Biden et al. These are things which should ultimately be rather positive for the oil price, but it hasn't been. And also, if you look at the number of long positions of oil, they've been dwindling too. So why the negative sentiment?
So I think to put into context, and the quite dramatic drop we saw over the past 2 days in crude prices is actually, yes, China is a big part of the picture, but so is the global economy. And we have somehow kicked off 2023 with a rather gloomy outlook of the global economy. And, as you were just mentioning earlier in your program, the Fed December meeting minutes of the Fed as well have served a reminder to, the Fed pivot enthusiasts, if you will, that the Fed is inclined to keep its foot on the brake. So, the global economy is not looking good. And of course, then, that doesn't bode well for the oil demand. Now, of course, Chinese economy and reopening is a positive. I completely agree with you. I think the problem right now for the market is where exactly in time to put that reopening. Could it be sometime in Q2, more like maybe the middle of this year? So, I think the market is taking a very short-term view right now. We are trading March crude, which is like, April and May fuel sales. So, yes, arguably, the market should be looking at the positive of the Chinese reopening. But I think the global economy is weighing down sentiment right now quite a bit.
How does this affect OPEC Plus this year?
Yeah, a very crucial question. I would bet that the last 2 days' dramatic drop in prices has put OPEC Plus on alert. Now, we know that the ministerial meeting is not scheduled until June, but there is the JMMC meeting, which is, includes the de facto leaders, Saudi Arabia and Russia, that is scheduled for the 1st of Feb. I think OPEC has promised time and again to itself and to the markets that they will be proactive, preemptive. I think they will also be taking lessons from the Fed's playbook, even, the dangers of acting too little, doing too little, too late. But my personal view is that, given that how many things are in flux right now, including what to expect of the global economy and global oil demand going into 2023, what to expect of the Chinese reopening, they may still remain in a wait and watch mode. I believe current prices are still a little above their pain threshold. But let's say Brent, if it threatens to go below $70, I think that's when OPEC Plus will probably be prompted to act with deeper cuts.